An ETF is an exchange-traded fund. It is basically a way to invest in a basket of companies, and it is bought on the market like you would buy any other company. This is considered the safest way to invest because your investments are well diversified across many different companies and therefore not as volatile as some individual stocks may be. Also, ETFs generally outperform picking individual stocks over the long term. The S&P 500 is the most popular index that ETFs try to track. This tracks the top 500 companies in the US. However, this includes companies that are mainly involved in alcohol and interest, therefore not permissible for Muslims to invest in. In this video, I'll be looking at 5 halal ETFs that are available for Muslims to invest in the UK. All of these are available on Trading 212, which is the platform that I use to invest. Hi guys, and welcome to my channel, the place for everything investing. If you're new here, don't forget to subscribe. Before I go into the ETFs, just a quick disclaimer. The ETFs in this video are considered to be halal because they are advertised as such, but make sure you do your own research into the Sharia compliance side of ETF investing. I will simply be looking at them from an investment perspective. The first ETF I'll be looking at is the iShares MSCI USA Islamic ETF. The ticker symbol for this is ISUS. I will leave a link to this page in the description as well, so you can have a look at the ETF for yourself too. Its expense ratio is 0.3% and its use of income is distributing, which means it pays out a dividend, and the frequency is semi-annual, so that's twice a year. There's over 100 holdings and the 3 years beta is 0.997, so ideally this should be below 1 because this represents the market. So 1 would be the market, and if it's below that, it means it's not as volatile as the market. The top holding is Microsoft, which is 20%, so they've changed this recently. They've rebalanced it recently, so I believe that was done just on the 9th, so not too long ago. But if you look at it on the 30th, so the 30th is the same, but if we look at it on the 30th of September, we can see that the holdings were different, and the top holding was 7.76% for Johnson & Johnson. And I think what's happened is because the healthcare stocks and the energy stocks have gone up, the ETF has rebalanced its portfolio into more tech, and you can see that here. So I'm not sure why they've got such a huge holding in Microsoft, although I do believe that out of all the tech companies, Microsoft is probably the best one to be investing in. So out of Apple, Google, Facebook, that would probably be the best sort of bet. So I'm not overly worried about that position size because of the company. It's quite a safe company, Microsoft. There's also a position in Tesla, so I'm assuming they're thinking the market is going to rotate back into tech, which is why they've sort of reduced the position size in the energy sort of sector and maybe taken a profit there because they have really gone up. Link in the description, you can see a full breakdown of all the holdings. So there's over 100, as I said, so they're all split on different pages, but overall it is a good variety of fairly safe blue chip companies. So you've got your Johnson & Johnson's, Procter & Gamble's, Chevron, Pfizer, Cisco. These are all great companies, and Microsoft as well. It's not as volatile as the other tech companies, but then you've got Tesla, that is quite volatile, but it's only a 5% holding, so it's not too bad, but it has also dropped over the past year a lot. So as I was saying, the rebalancing, maybe they're thinking that could be growing for the next few months or next year or so, so we'll see how that performs. So in terms of the exposure breakdown, we've got a lot in tech, 35% in tech. So previously, before it was rebalanced, so this was rebalanced on the 9th of December, so before it was rebalanced, I believe healthcare and energy were the two top sectors. So it's good to see that they've sort of rotated out of that and gone into tech because they have taken a beating in the market recently. And if we look at their performance over the past 5 years, we can see it has grown over 47%. Even at the moment, it's not too far from all-time highs. So if we just take it around all-time highs, it's around just 5% below its all-time highs, which is quite impressive given that the S&P 500 is down a lot more this year. So I believe a lot of that is due to its exposure to the energy and the healthcare sector. But obviously with it rotating more into tech, we'll see how that performance does over the next year or so. Also, I believe it's done quite well because this particular ETF is in GBX, which is obviously in pounds. So although the pound may have dropped over that time, the US dollar increased, which means the net difference was a gain in the holding. So I believe the foreign exchange has had a positive impact on the holding. But I would say overall it is a fairly safe ETF in terms of the holdings. They're not overly volatile, and we did go over the beta as well, so that was below 1. So I would say it is a great ETF, and also it's USA holdings only as well. So if you want that full exposure to the US market, this would be a great holding. And remember, don't take any of this as financial advice. You should do your own research. So use the link in the description that I provided and have a look at the holdings yourself, the expense ratio, and any other factors you want to look at. The next ETF I'll be looking at is the iShares MSCI World Islamic ETF, and the ticker symbol for this is ISWD. This is very similar to the last one, but the last one we looked at was USA only. This covers the world, so it includes US as well, but also other countries. So if we look at the fun facts, we can see the expense ratio is 0.3%. The use of income is again distributing, which means it pays out a dividend. And the frequency of that is semi-annual, so that's twice a year. So very similar to the last one, I think almost the same. The portfolio characteristics, so we've got holdings over 350 holdings, so a lot more holdings than the previous one. And the 3 years beta is again below 1, 0.997, which is good. That's what we want to see. It means it's not as volatile as the market. Now if we take a look at their holdings, we can see the top holding is Microsoft again, as was the previous one, but the holding weight is not as much, so that's 9%. So in the last one it was 20%, so that was quite high. And again, I think it follows the same sort of rebalancing frequencies. And again, second holding is also Tesla, but this is more of what I want to see because it's not as high as a percentage. It's not 5%, it's 3.65%, which is a bit better. But I think everything else looks pretty much the same. I believe the only difference would be Shell, I think, in the top 10 holdings, 1.56. So this does cover other countries, so it's not just the US. So I believe all of these are US. Shell I think might be UK, I'm not sure. But we've obviously got different companies on the second page here. If I scroll down, we can see an exposure in terms of geography. So the fund is 65% in the US, which is where the majority of it is invested. So you do still get that full US exposure, and then obviously you've got UK, France, Canada, and all these other countries. So I would say if you are looking to get one ETF that's got everything, then this would probably be a good ETF because you still get that US exposure and a lot of it is exposed to the US. But what can happen is, just say the US economy declines and sort of UK overtakes it, just as an example, then I'm assuming they'd rebalance it into the UK and then less would be balanced in the US. However, if you was just invested in the US ETF, then you'd have to really just depend on the US market doing well. Whereas this is more diversified, so you've got different countries. In terms of the sector, we've got a high sort of holding in the information technology, as with the previous, healthcare, and then you've got energy as well. So this is very similar to the previous ETF that we looked at. So if we look at this performance over the past 5 years, it's also performed pretty well as with the previous. So I think the previous was about 45%, but this is 31%. because it includes the world. So the US, I believe, probably outperformed the rest of the world, so that's why there's a bit of a difference there. But again, if you are invested in this, you're taking on slightly less risk because you're not depending just on the US market. So if you look at the past 5 years, we can see it's gone up over 30%. And again, as with the previous one, ISUS, it's not too far from all-time highs, so I think that's around 4%. The next ETF I'll be looking at is the Invesco Dow Jones Islamic Global Developed Markets. The ticker symbol for this is IGDA, and this is an accumulating ETF, which means unlike the previous ETFs, it doesn't pay out a dividend. So what it does is it instead reinvests the dividends into its own ETF. The management fee for this ETF is 0.4%. So let's take a look at its holdings. So if we look at the top 10 holdings, we can see the top one here is Apple. So that's about 6.6%, and then we've got Microsoft, which was the top holding in the past 2 ETFs. So altogether that's over 10% just in these 2 companies. And we've also got Amazon and Google as well. So I would say this represents more of an S&P 500 sort of ETF, because you've got more of the big tech companies. You've got Apple, Microsoft, Amazon, Alphabet. We've also got Tesla as well. And if we scroll up, we can actually see an exposure breakdown by sector. So the biggest sector is the tech sector, then you've got the healthcare, and also by country as well. So the majority of this fund is in the US. We've also got some in other countries as well. I'm not sure exactly which companies they are invested in terms of the other countries, but that is something that you can check, because I will leave a link in the description for this ETF as well, so you can have a look at that. An important thing to know about this ETF is that the base currency is in US dollars, so you will be paying for this in US dollars, so you will need to take into consideration the FX impact of that. If we look at the performance of this stock over the past year, so this ETF only started on the 28th of January, which is why it's not showing up any previous period when I select 5 years. So this is a fairly new ETF, so also consider that before investing. So we can see since its inception, it's gone down 10%, and that was at around the end of January 2022. So if we compare that with the S&P 500, we can see year to date it's dropped 16%. However, if we would get a better view looking closely at the date that this ETF started. So if we take it for around here, we can see that it's dropped about 10% as well, so give or take. So I would say that this ETF does follow the S&P 500 more closely than any other ETF. The next ETF I will be looking at is the Wahid FTSE USA Sharia ETF. The ticker symbol for this is HLAL, and the expense ratio according to this website is 0.5%. And according to this site, they do also pay a dividend, so their dividend is 0.4, and that is a yield of 1.08%. So this is a list of their top 10 holdings. The top 2 holdings are Apple and Microsoft, which altogether comes to more than 25% of the overall portfolio, which seems quite a big chunk. Out of all the tech companies, Apple and Microsoft are probably the least volatile. So I believe if any company, it would make sense for the top 2 for these weightings to be these 2 companies. And then you've also got Tesla, so that's around 3%, and anything other than that is also 3% or less. And if we look here, we can see the top sectors of the ETF. So the majority of it is in tech, so that's 41%, so that's a lot more than the previous ETFs that we've looked at. And the healthcare is the second biggest, and then obviously you've got oil and gas as well at 10%. So overall it is quite diversified. If we look at this ETF's performance, we can see since its inception it's gone up over 47%. So this only started in 2019, and year to date it's gone down 15%, so sort of in line with the S&P 500. The next and final ETF I will be looking at is the Saturna Alcotha Global Focused Equity ETF, and the ticker symbol for this is AMAP. The expense ratio for this is 0.75%. This is a list of their top 10 holdings. I'll be quite honest, I'm not too familiar with all of these holdings. They're not your common companies that are used in ETFs such as Apple and Microsoft, but with that you may have a more diverse range. And in terms of portfolio weight, the maximum is 3.94%, which is pretty good because no stock is too heavy weighted in the portfolio. If we go up, we can see the ratings. So again, as with the other ETFs, the majority of this is in the tech sector, and the second biggest sector is the healthcare sector. So if you are interested in this ETF, again, I will leave a link in the description and you can have a further look. Its performance, it's gone down over 9% since its inception. So this also started fairly recently in 2020, and since then it's gone down 9%, which isn't too bad considering the current market conditions. And also this is an accumulating ETF, which means that any dividends are reinvested into the ETF. So that was just an overall quick overview of 5 ETFs that are available on Trading 212. They are probably also available on other platforms as well, so do check with the platform that you're using, and remember to do your own research as well before investing, because I'm just a beginner investor myself who's still learning, and this isn't financial advice. An honorable mention is also another Islamic ETF under the ticker symbol of ISDE, but this is more focused towards emerging markets, so that poses a higher risk. But if you do want that exposure, then you can get that in this ETF. I'm sure there's other ETFs that I've probably missed off as well, but I just wanted to just give you a bit of an overview of 5 that I have come across on Trading 212. So if there are any other ETFs that you know of that are available on Trading 212 or any other platforms, then do let me know in the comments below. If you made it this far, then I would really appreciate if you can like and subscribe to the channel for more content like this.